Hello, I'm Bryce Noor, Senior Editor of Farm Futures Magazine. Welcome to The Buzz for Thursday, February 14th, 2013. Market analyst Paul Bergner joins me to discuss grain markets that are disappointing, to say the least. In fact, the market seemed like a husband who forgot it's Valentine's Day today. USDA capped a bad week with problems surrounding release of its regular export sales report. Not that the numbers had anything good for soybeans, which led the market lower this week. Net new bookings for row crop beans were down thanks to cancellation of 8.4 million bushels by China before traders there took off this week for their Lunar New Year holiday. The data suggested China was again washing out purchases made at higher prices and replacing them with cheaper beans. However, without further cancellation, it's likely that Chinese demand is greater than forecast, which could stretch already tight U.S. supplies even thinner by the end of the marketing year. January crush from the National Oilseed Processors Association is also expected to be strong when it's reported on Friday. Nonetheless, futures continued their sell-off this week after failing to take out resistance at $15 earlier in the month. February washouts aren't historically unusual, and this year's decline reflects the big South American crop farmers are starting to harvest. To be sure, conditions aren't perfect in either Brazil or Argentina, where either too much rain or too little rain has fallen in some areas. But the crop coming out still looks huge. March futures is fighting to hold support above $14, but could be vulnerable to a break towards $13.50 if it can't hold. Do you think the market will be able to keep a 14 in front of it, Paul?
Well, I sure hope so. And I think that crush report that's coming out tomorrow is going to be a big piece there. Uh, as you mentioned, we're in that place where we're seeing that February downturn, and the markets typically soften at this time of the year. So keeping that 14 is going to be a challenge. I think that large South American crop is key, and probably the key to that is getting it to the ports and getting it loaded in a timely manner. That will tell what our exports look like over the next month or so, is whether or not the market's getting enough beans out of South America. So I think there's some things in there that could bode well for us. I think that crush report is going to be the key tomorrow.
Corn couldn't hold above $7 this week, at least in the futures market, where sluggish demand weighed on prices. Exports improved a little, but only a little, to 11.2 million bushels in the latest week. Ethanol production also rose last week by 15,000 barrels a day, but year-to-date totals are starting to slip below the rate forecast by USDA for the marketing year. Farmers are holding tight, helping boost basis in the cash market. USDA's 10-year baseline projections for corn released Monday echoed the themes of the statistical projections put out by the Congressional Budget Office last week. The agency forecast a big 2013 crop, 4.45 billion bushels, which would increase carryout towards 2 billion bushels. These numbers will be updated at the annual USDA Outlook Conference at the end of next week, but aren't likely to get much better. The only good news for growers comes from the Risk Management Agency, where the average February price for December futures that will be used for crop insurance base prices is $5.74. That's a profitable price for growers taking 85% revenue protection. Paul, March corn is stuck in a bearish trend of lower highs and lower lows. Do you think the January lows will hold?
Those January lows are not too far off right now at about 680 on that contract. So it'll be interesting to watch. I think there is definitely some support there. That ethanol number is getting better. We'll see where that goes. Are we getting to a place where we're seeing some profit back in there? We get some of those plants back up. That'll make a difference. We'd like to see some exports move yet. There's still a little bit of short there. The other piece that's out there is the feed use, and there's very little hay in the country, so the corn price may attract some of those feed buyers back into the market, and we'll see where that goes. There is an opportunity, I think, that we could stay above that 680, but boy, it's going to be a challenge to stay up there.
Well, the news in the wheat market was a little more positive, but prices were having trouble there too. Futures slipped to new 7-year lows at all three exchanges this week. Wheat appears to be gaining favor for feed usage, but only if it stays in line with corn, adding pressure to prices as a result. Export sales do appear to be improving, with the total for the latest week coming in at 26 million bushels. But the U.S. is losing out to France for some business into North Africa. Prices in Paris are also sliding fast. Weather forecasts and a little precipitation on the plains also weighed on prices, but amounts so far have done little to improve conditions. Production potential also seems to be slipping a little in Europe and Russia for 2013. But so far, end users only appear interested in bargains. Paul, do you think the market's going to give us a rally as the crop comes out of dormancy on the plains?
I've got two pieces in there that are playing against each other. I think the export market seems to want a little bit cheaper wheat yet. It's still looking for a lower price. We're still not pushing as much wheat into the market as we thought when we got into these prices. So I think that's on one side of it. The other side of it is we've got a line of weather coming through the plains. We're moving one storm after another. Unfortunately, they're carrying very little moisture. What they're bringing is something that looks like it should have some moisture in it, but it's coming in really small increments. But it's bringing an awful lot of wind. That wind is starting to cause damage to that wheat crop in terms of soil moving and causing damage there. So we're really starting to fight that. It depends upon how crop conditions come out of this and where we go. We could see a rally if we continue to be dry and windy into these storms. If we get some heavy moisture out of one of these storms, we could actually see it go the other way. So the market really is going to look and see what comes from these weather events.
Well, thanks, Paul. We'll be back next week before I head south to Commodity Classic. Join us then on the next edition of The Buzz.